This week on Wealth Track, small cap value manager David Nadel raced to first place among all foreign mutual funds last year with the Royce International Premier Fund, and also led the field in the European fund category with his Royce European Small Cap Fund. This champion strategy is next on Consuelo Mack Wealth Track. I looked at last year's results, and you are running two top performing mutual funds of 2015, which I mentioned in the introduction to you.
Yep.
And it's interesting that they're small cap international funds, but in fact it was kind of a textbook case of diversification working in this case, where international small caps actually did well and your funds did extremely well. You're saying that this is not a one-off, that in fact that the international small cap class has some key attributes that are very attractive. What are they?
Yeah, I think that's right. I think typically investors, when they look beyond what is typically a narrow scope of their portfolios, being very U.S. focused, and
right.
They think about, well, should I invest abroad? The first place they usually go is to large caps.
And the multinationals.
And the multinationals.
Right.
The challenge with that strategy is you're repeating a lot of what you're doing at home, because a foreign-based multinational isn't really that different from a US-based multinational. And so the domicile doesn't make that much of a difference. In the small cap space, you have a broader range of businesses to choose from. You have a lot of companies that are global number ones or global number twos in a niche, high market shares in niche areas. But you have a range of companies to choose from, anywhere from very globally structured businesses to very country-specific businesses. Again, hard to replicate that in a large cap strategy,
right.
A country-specific company. So if we think about in the Royce International Premier Fund, a holding like VZ Holding is a Swiss-only business. Bajaj Finance is an India-only business. Adontaprev is a Brazil-only business. If you like the characteristics of those countries and those businesses, again, hard to replicate with a large cap strategy. Overall, the performance of international small caps on a rolling monthly 10-year basis, performance has been better than U.S. small caps, but with less volatility.
So that's interesting.
So that is
right.
surprising often for people to hear, that the international subset is less volatile than the U.S. subset when it comes to small caps. Correlations between international small cap and U.S. stocks overall are less than 0.6 in terms of performance correlation. That's a very low number. Obviously, 1.0 would be perfect correlation.
Right.
So lower correlation in international small caps.
So you're diversifying your equity portion of your portfolio.
Precisely.
Less volatility.
Exactly.
Right. And the other thing is that I think you told me at one point there were 25,000.
That's right.
Right.
There are 25,000 companies traded outside the U.S. with market caps of $5 billion or less.
Right.
It's about 4 times the number of small cap companies as you have in the U.S. So there's no question that it increases in a huge way your opportunity set.
Right.
And then it's a question of finding a strategy where you're picking companies that you actually do want to own and invest in for the long term, because arguably a large portion of that universe is not really so investable. Loss-making companies, not such great companies, low liquidity, et cetera.
Tell me about the dividend-paying capabilities in the international small caps.
It's very common to find dividends with international small cap stocks. I think every holding in the Royce International Premier Fund pays a dividend. Some of them are small yields, some of them are generous yields. That's not because we've sought out dividends. It's just because it's very common that that's the case. The companies are often in an earlier stage of their corporate evolution. There's often a family that's involved. They want that dividend for income stream. And the whole culture of kind of trading in your own shares is not well regarded outside of the U.S. It's kind of frowned upon. So again, the dividend becomes more important rather than a CEO buying here, selling there. They're not going to trade their shares as much. They're going to rely on that dividend. The dividend yields being twice what they are in the U.S., that's consistent with the valuation picture overall.